Hello traders, Namaskar. I'm making this video on the afternoon of 12th of June 2022. It's a Sunday afternoon, 11:56 a.m. and together we are looking at the Nifty Nifty futures chart. I have opened two different time frames. The left one is daily, the right one is 75-minute time frame. If you've been following my videos, you know that I use the 75-minute time frame for the short-term trend, the daily for the intermediate or medium term, and the weekly for the day for the long term. But we'll restrict ourselves to the 75 and daily in our market takes, market wraps. So one word that I can think of what happened last week was I would say disappointment. I have the performance table here, which clearly reflects that the Nifty was down 2.3% last week. Month till date, it's 2.16, which is just had 1/3 of the month of June as of now, so we still have some time left. And on a year till date basis, the index is down close to 7%, so it's not been going that good. I say the word disappointing primarily because if you remember, we had a decent bounce back, and since its highs, the correction that we've had have been quite severe without any meaningful bounce. The only meaningful bounce that we noticed was recently. In the 75-minute time frame, it clearly reflects, it shows how well the short-term and the medium-term moving averages turned up. And this was just the first sign of a possible trend reversal, the first sign that we may have a bottom in place, maybe a sign that the month of June and July can give some upsides. Now, it's not completely negated, but what the fact that it is disappointing is that it's given away too much. More than 50% of the recent bounce back is now retraced back. These are not signs of strong uptrends. Strong uptrends do not retrace themselves more than 50%. The fact that it has now retraced more than 50%, it means that the market is probably not ready to get itself back into an uptrend which is resilient, which also means that the choppiness, volatility, sharp bounce backs, retracement of more than 50%, range bound market activity is going to be the norm of the market unless the prices decides upon a fresh trend either on the upside or on the downside. Talking about the trend, the daily charts were in a strong downtrend. It was. Now, thanks to the recent bounce back, we've seen some amount of improvement in the short-term trend. And now when we add the recent last week's fall, it makes the situation of the underlying trend a little undecisive. So it will be better not to say that the market is in an uptrend or in a downtrend. It rather is in a non-directional state with a little bit of intraday volatility. This is from the daily time frame. The 75-minute time frame, which is the short-term time frame, is clearly moved into a downtrend, and so the possibility of further weakness should not be discounted. In fact, the last time I checked SGX, it was down 100, 130, 30, 40 odd points, trading close to the psychological round figure of 16K. So a retest of 16K should not be ruled out, which is very likely. Probably if we gap down again tomorrow morning, the likelihood is there that the index will come to 16K. Try not to go short tomorrow morning. I think that will not be a very smart move. On the other hand, I would be looking for any kind of strong stocks which have been holding well, and there are few of them which can give us a breakout on the upside. So yes, disappointing. Then that holds for both Nifty and Bank Nifty. Both of them have retraced quite a bit. Now, the Bank Nifty particularly is trading back to its previous swing highs, and I've been marking them, but it's been inching back, and very, very clearly you can see that the 75-minute time frame has taken itself down, and now it needs to deal with this level. So 34,400, 34,200, I would say if I use a round figure for the Bank Nifty, it would be 34K and 16K for the Nifty. That is the two levels that one should look for on the downside. Too early to say that the index will now fall all the way back to 33,200 or for the Nifty significantly down that 15,500. It's too early to say that. We should give this trend a little bit of more time just to show itself that whether it has the potential. Now, talking about the potential, if we take a look at the sectoral indices, if we take a look at the top 15 stocks which make up Nifty 50, is there any pocket of strength? Is there any pocket of strength within the sectors or the stocks which can lead this movement? Now, based on my 75-minute daily rules that I use, I have marked the sectoral indices over here in terms of the underlying trend at the current juncture. In terms of strength, the only meaningful sector that stands out is auto and oil and gas and a little bit of PSU bank, but auto definitely yes. Auto, we can see over here last week was actually a gainer, and year till date it's around 4% gain. And because we are talking about auto, and this is the CNX auto index in front of you on the daily chart, I'm taking a look at the left hand side chart, we can clearly see there's been a double inside bar shaping up for the last 2 bars for the last 2 days. So if all holds well, if the auto index or the auto stocks do not open significantly down tomorrow morning, and in case we get a breakout, then we may see a fresh movement on the upside. 2 stocks to keep a closer look at, Maruti and Tata Motors. Of these 2, I will quickly take you through the particular chart pattern of Maruti, and the stock has been resilient. You can see very clearly that the bounce back after it just consolidated has now given us fresh signs of a movement on the upside, but it has some resistance to deal with, and these resistances are not new. These resistances are fairly old ones. So an important breakout for the stock is definitely the 8100 mark, 80, 90, 80, 85. And so 80, 8050, 8100 kind of zone is very important. The stock is already up for 5 consecutive trading sessions. So a little bit of consolidation, a little bit of a wait before it breaks out is important. So keep an alert at 8K for this important 4-wheeler stock. So apart from, going back to the sectors, apart from CNX auto, you have the oil and gas over here and the PSU bank. The PSU bank, I wouldn't say as strong as auto, but it's just at the make or break level. So if State Bank of India can give us a move, then probably yes, or else this sector will again move down to a downtrend. Amongst the downtrends, of course, IT was the one which has fallen significantly. It's still a little weak. It's the pharma that you should keep a close look at. Now, there is no doubt that the pharma sector, this is the CNX pharma, is in a downtrend across all time frames. But what I noticed in the 75-minute time frame is very early sign of a short-term reversal. Tomorrow we might have to deal with a gap down, but it's the recurring, it's the next move which is important for me. I would like to see the CNX pharma scaling above Thursday's high. And CNX pharma we don't trade, so which are the stocks which are important? You should keep a closer look at Cipla, Dr. Reddy and Sun Pharma. Especially Dr. Reddy and Cipla is very likely, if this is a short-term bottom or a medium-term bottom for the CNX pharma, then Dr. Reddy, Cipla, Sun Pharma, these stocks should give us a bounce back. Especially Sun Pharma is very close to its supports. I hope it doesn't break down and provide some support to the overall market. But apart from pharma, the rest, which is media, consumption, IT, metals, I think it's going to take a little bit of time, especially I think IT. We did have a good move. I was keeping a close look at Infosys for an expected move on the upside. Did not come. On the other hand, now it's turn of TCS, which is, you can very clearly see how strong supports, short-term supports the stock has created for itself. Any break below this level and it slips further down. So it's make or break for this important IT stock as well. Then there are quite a few sectors which are flattish, which need some kind of a price strength to reverse the trend, especially something like the CNX FMCG, something like the CNX real estate. This is also going to be an interesting play. The real estate is behaving very much like the benchmark Nifty, Bank Nifty, given us a bounce back, has gone through a short-term correction. But over the last 3 days, the CNX Nifty real estate has not drifted down. On the other hand, it has created a range for itself. Why? Does it have any strength? Will it give us a breakout on the upside? Possible. So keep a look at stocks like Oberoi Real Estate, Shobha, Prestige. I think these are the stocks. DLF doesn't look that great, but Oberoi definitely one important candidate. If you take a look at the other asset classes, crude is at $120. So your inflationary pressure is very likely to stay unless we see significant correction from this important energy asset class. There's no sign of topping out right now. So the possibility of a retest of 125 or further towards 130 is still there. USD INR 78, a little above that, and again there is no sign of topping out here. This should to some extent help the IT stocks, but it's not going to, because if it had done that, then IT stocks wouldn't have fallen this way. So it plays a small minor role, not significant. And over here also it doesn't seem like it's going to come down anytime soon. And finally we have the gold. Now gold has not played a very strong hedge or a meaningful hedge in this particular correction. If you take a look at gold, the performance table clearly reflects that YTD it is up 2.5%, but YTD for the Nifty is down close to 7%. So not much, but we've seen a sharp move in our last trading session, and whether it's going to give us this consolidation breakout coming out of the range or not, I don't know. Let's see, but we should give this asset class also a little bit of time. Gold is probably trying to bounce back. Crude, dollar is still pretty strong. Nifty, Bank Nifty is disappointing. Few odd stocks here and there which can show us some strength. Maruti is one of them. Indigo, you can take a look at. I will be primarily sharing those chart patterns which looks short-term to medium-term bullish. Staying away from suggesting or sharing with you shorting opportunities, because everyone who's listening to me may not be that knowledgeable or ready to short the market, and shorting requires a different kind of a skill mentality than going long. So Indigo is one counter. Why I like Indigo and I'll be keeping a close look is, number one, after the trend reversal, the short-term trend reversal, the stock has held decently well over the last 4 to 5 trading sessions in relation to the Nifty. In fact, Friday the stock bounced back pretty well with a gain of around close to 1%, 15 points. And I feel that if we get a breakout, this kind of a breakout from the stock, we might see some fresh buying impetus. 1820 will be an important, what was high? 1820, yeah, you can put an alert at 1820. Adani Enterprises. Adani Enterprise also is one stock which has held well. You can see very clearly it needs to deal with its previous resistance. Very clearly it is respecting that 2240, 42 kind of levels. Inside bar in Friday's trading session, and so a breakout above that, maybe we can see a structural breakout for Adani Enterprise on the upside. So there are few such odd stocks which can give us some possible movement. When you're looking for long opportunities, especially from a short-term trading point of view, I will strongly suggest and recommend go for those stocks which have shown strength this year or this month or last week. Do not try to buy the weak counters from a trading point of view. From an long-term investment point of view, yes, you will find some stocks at reasonable prices. So you might think of buying stocks at those who are coming off for a long-term point of view. But from a short-term point of view, from a trading point of view, I would strongly request you to stick to those sectors and those stocks which are showing strength. So find them, those stocks which are YTD or at least this month is showing some strength and has not come down as much as the benchmark Nifty or Bank Nifty has. So we'll take a look. We'll figure out what's in store for both of us next week, especially if it gaps down, which is very likely. If it comes close to that 16K mark, do we see some kind of a consolidation? Do we see a quick bounce back, or do we see a follow-through sell-off and stays below 16K? I don't know, but stay light, and we are back to a zone where markets is very likely to stay volatile rather than trending. So it's going to be difficult to take returns out of the market. So be it. All the best for the week ahead. Take care of yourselves. trade well and trade wise.